biggest revenue driver for the company. But as growth slows, what will or should be the next one? For more on this, let's bring in Gene Munster of Loup Ventures. Gene, great to have you with us.
Hi.
Hi. One criticism, if you want to call it that, of the company is that they need recurring revenue. Not just services revenue, but revenue that is recurring. And I'm wondering how you think the company gets there if it needs to.
They need to get there, I think, for the valuation to break out to new levels. I think that if they get into new categories, whether it's the headset we've talked a lot about, potentially something in the car, not saying they're going to get there, but that would be something that would make it so they don't have to do that. But I want to more directly answer your question, is that I believe that Apple wants to sell hardware as a service. They've been experimenting with the iPhone upgrade program that has had some success, but the concept of what we've seen, our usage, the need for more consumer-driven tech support over the last couple of years, I think opens the door for them to sell hardware as a service. We refer to this as the 360. We've been talking about it for a couple of years now, and I believe it's still on the docket. What that means is essentially you pay Apple one monthly fee, like you do with some of their content. You can get arcade, you can get news, you can get TV Plus. But imagine doing that for, let's say, $150 a month, and then you get upgraded every couple of years for your watch and every 3 years for your computer. That would, I think, have a significant re-rating. And as far as the timing on that, it is a function of time. It's probably more 3 years out than 1 year, but I believe that eventually this 360 bundle will come to life and will satisfy this nagging question around visibility.
Hey, Gene, it's Karen. So that's a really interesting model, but I want to switch for a second to another one, which is the car, which you touched on, which would seem to me to be just a gigantic capital expenditure. Not they can't afford it, they can, but what do you think of that endeavor? Do you want them to do that?
I would love it if they do it. I'm not going to say that they're going to do it today, but I can say what we saw at WWDC around them taking over the whole console and having 15 major OEMs adopt it, I think is testimony to the traction that consumers have wanting to integrate their mobile experience into a driving experience. And so the CapEx question, just quickly to address that, is that it is a big number. They can afford it, but I think that there is a shift in terms of how I think about it. I do believe that making a car, an electric car, is less parts. I think it's less complicated than would meet the eye. It still would be a huge event if it happens. Apple wants to do something. Whether they get there or not remains to be a question. If they do it, the stock is going vertical because the addressable market, I mean, they can get, if they get 10% share of the automotive market, that will effectively double their business. I mean, this is the equivalent, the car would be the equivalent to the iPhone as to the iPod. Life to date, they've sold, now that product's done, but 450 million iPods. They sold 2.3 billion iPhones life to date. It's now 50+% of the business. That's something that the car could be there. I hope they do it. Fingers crossed, going to have to wait a few years to find out.
Gene, there's a lot of concern, I think, going into their quarter, which is a month from now. But for the first time in a while, you can make a very compelling case for Apple on valuation, probably close to, I don't know, 20 times next year's numbers. You back out the cash, obviously cheaper than that. What are your thoughts going into earnings here?
I think you need to be cautious across all of tech. I think Apple's no exception. I'm a big believer. I think this is a $250 stock. I think that the odds are that it probably goes lower, just like everybody else, into the print. I hope I'm wrong, but that's the bet. And the reason is that you're just talking about it with FedEx. Like, if you give positive guidance in this environment, you're tone deaf. And so Apple gets that. They do give a form of guidance. I suspect that it's going to be something like the June quarter was great, but there's uncertainty, so we're going to play it a little bit more cautious in terms of our outlook. And I think that even great companies, that has a negative impact. That's trading. I think if you think about investing, what they're doing with this 360 bundle, we talked about other product categories, still very bullish, but I suspect that a lot of tech is going to sell off on this June print.
Gene, last quick question. Tonight we got RH revising its guidance lower after 27 days after they gave earnings and they gave a forecast. Then I'm wondering, are there any data points that you've seen so far that get you concerned? Maybe not just a single one, but but a combination, I mean, between Microsoft's FX warning or Target or what we heard tonight from RH?
The piece that's made me most concerned is some work that CNBC did. There was I forget what it was, 20 or 25 Fortune 100 CFOs, I believe, loosely remembering this, but this was recently, and all of them said that they're less optimistic about the back half of the year. I think that's all you need to know. As far as incremental data points specific to Apple, as we look at their lead times, the lead times continue to improve. That's hard to say whether that's a function of improving supply chain or decreasing demand. I think it's probably the former. And I think that just across the board, one last data point is around big tech, that 10 of the 20 big tech had negative commentary around the June quarter when they reported March. Since that, 2 of them, Microsoft you mentioned and Tesla, have come out and said negative things about the kind of what the environment that we're in. So call it 12 of 20. I think that number is going to go up even without any specifics. It's simple psychology from my perspective. And I want to leave with where we've left before, that I think all of this is going to be painful, but I think it does still set up for resetting growth rates in 2022, which does set up for, I think, what's going to be a strong year for tech in 23.
All right. Gene, thanks. Gene Munster, Loup Ventures.
Thank you.
All right. Well, yeah, I mean, I guess if there's a reset this year, it's even better for 2023, Grosso.
Cash move everything around me. Bet I'm surrounded by sharks, so try not to get wet. Your finances are gone, the more you are a threat. The more money you get, the more you should invest. I'm black on my neck, back on my shift. Back on my grind till the sun start to eclipse. Credit score check, debit amount check. High risk success, bet I'm out of debt.